Hello, everyone, and welcome to Escape the Echo Chamber, where myself and my incredible co-host, Matthias, attempt to challenge the opinions, beliefs, and information around certain narratives that we find in the kind of people and talent space. This week is a very different approach, simply because we are widening our perspective to the state of the economy. And this is why we have our guest, Julius Probst. That was a complete Anglophiling of the surname. My apologies.
All good. Probst. Oh, you almost got it? Yeah.
Almost. Yeah. It was kind of, I probably should have gone for a few more tries. But Julius joins us. He's a European Labor Economist for Appcast. And we are looking to address the echo chamber. Is Germany the sick person of Europe? But before we get into that, Julius, give us a short introduction. Give us a bit of context in terms of what is a European Labor Economist at Appcast.
Yeah, sure, Glenn. Thanks for having me, first of all. I'm the labor economist working for Appcast. We are part of Stepstone. Stepstone is one of the largest job board companies in the world, with job boards in a lot of different countries, including Germany, Austria, the UK, and so on. Appcast is part of Stepstone, but we are not a job board per se. What we are doing is actually programmatic recruitment. So basically, recruiters come to us, and we are kind of like distributing job ads across the marketplace of job boards and see where they perform best. And in my role as labor economist, I analyze the labor market. So that would be Germany, the UK, that's my main focus, but continental Europe in general. And I basically write on our blog about how the labor market is performing and what that means for recruitment. What should recruiters expect? I write about long-run trends, and I obviously also talk to our clients, which would be recruiters, and tell them what's going on in the labor market in general, in different industries in their space, and what that means for them.
Amazing. And that kind of offers the context for this particular pod, in so much as Matthias and I are super keen to discuss probably broader topics that have an impact on the people and talent market. And you wrote a couple of blog posts back in 2024 around, is Germany the sick man of Europe? And that certainly piqued our interest, because from our point of view, we understand the importance and impact of understanding the kind of economic landscape when it comes to people and talent. But Matthias, dive in. I think that gives context, but it certainly, there's more to it than that.
Yeah, thanks all for joining, and Julius, thanks for taking the time to speak to us about it. I think before we jump into this German topic, maybe let's zoom out a bit and say, when you take a look at economies and try to understand what is their situation at the minute, how do you even start a proper assessment? Maybe guide us a little bit through, like, what are the data points that you look at, and why are they so important, and maybe also so robust to choose to actually get a good understanding of how an economy is doing?
Okay. Yeah, I mean, as we all know, the economy is kind of like a very large and complex phenomenon. There's a lot of different trends that might be going on at the same time. And all of these have, in the end, they might have an effect on the labor market and on the number of jobs available, on the number of open positions available, right? So most of us, everybody who's of working age, most of us are relying on the labor market in one way or the other, right? So we either employed at a big company, so we rely on our income for everyday spending decisions, or maybe we are a small business owner, but then we also have employees. So everybody, most of us are some way or the other active in the labor market, right? And so as we all know, the last few years have been particularly challenging or interesting in one way or the other, because we had all of these massive macroeconomic shocks that were going on, and they affected the economy in very, very deep and transformative way, right? So we first had the pandemic in 2020, which was absolutely crazy, and kind of like governments decided to shut down the economy for weeks at a time, and most people suddenly had to work from home, and there were also some layoffs. Other companies decided to keep the people employed, but they had to be sent home anyways, right? So the labor market and the economy changed from one day to the next. Then we got very lucky 1 year later that the vaccines got rolled out, and things were starting to get better, and like people could return to work and the labor market recovered. And at the same time, governments were like kind of like stimulating the economy because they didn't want a repeat of 2008, a deep recession. And they were pushing a lot of stimulus into the economy as to kind of like create jobs and prevent a large recession and large job losses, and like all of these factors had a very big impact on the labor market. So this is the kind of things I'm looking at. So you look at global macroeconomic shocks that affect GDP in one way or the other. You look at what central banks or fiscal authorities are doing. Um, you look at global macroeconomic trends. You can look at long run trends, demographics, and AI. And a lot of these have just come together over the last few years and had an effect on the labor market. And then I'm looking at things, how employment is changing across industries, and then what that means for recruiters and talent acquisition.
Mm-hmm. And so labor market data makes a lot of sense, right? For example, and we will talk probably about this in a minute, especially with Germany. Also, how do you figure out what is the state? What kind of economy do we have? Is this more an industry heavy one? Is it more a service related one? So
Yeah.
is this, how do you grasp that? And also, how do you then get maybe of an understanding of, okay, who are the big players here? How many big organizations or companies do we have in one area or the other? Is this all like where you get this labor market data then and then or say, okay, they're in these sector and industries, and that means that they have certain dependencies that then can influence certain other movements? Is this how you do it, or how can I imagine this?
Yeah, that's one way to do it. So maybe let's take the example of Germany and the United Kingdom. Actually, I wrote about these two recently on our blog, and how the Trump election might influence maybe the United Kingdom's economy and how it might influence Germany's economy. And so if you look at Germany and the labor market data and the structure of industrial output and so on, we all know that Germany is still relatively dependent on manufacturing, right? So if you compare Germany to other advanced economies, we still have more people employed in manufacturing. That is the car industry, that is every kind of like supplier, large big suppliers to the car industry. We have what we call in Germany the kind of like hidden champions, the German Mittelstand. So this is kind of like small to medium enterprises in manufacturing. A lot of them in West Germany, kind of like in Bavaria and Baden-Württemberg, but also in North Rhine-Westphalia. They are like specialized in manufacturing of some specialized goods, and they're exporting to all over the world. And so Germany is still quite dependent on manufacturing, and that is hurting Germany actually right now. We can talk about this a little bit later. Whereas the UK, if you look at the UK economy, its structure is actually quite different. So the UK lost a lot of manufacturing jobs already several decades ago in the 70s and 80s, and basically the UK transformed into more of a service economy with London at its center. So in London, you have all these big law firms, you have consultants, you have finance, you have people who are in the merger and acquisition space, you have people employed in tech. And so basically what the UK and London is exporting is services. It's people who are on phone calls with clients from all over the world, and there would be consultants and lawyers and so on, whereas Germany is still exporting more manufactured goods. And so that is probably leading to kind of like two very different trends right now.
Yeah.
If you look at the German outlook and the UK outlook, potentially.
Is super interesting. So that means that if they are, for example, let's say, if we want to change that because Germany is very dependent on industry, then this is not as easy, yeah, from a struggling economy, maybe to change the way how your economy works. Like, so it leads me back to the question a little bit, like, when you look at economies around the world, more in general, is how fast have you seen then changes from being a struggling economy versus becoming stronger again over the course of time? I mean, we have seen several examples, I think, with different countries, also in Europe. Yeah, I just read your article on recruiting economics. Is the East Germany has a East Europe has a rise. We've seen this with the southern states like Spain, Italy as well. There was an uptick compared to what we see in Germany. So how long does such a turnaround take?
Yeah, it definitely doesn't happen overnight. It can happen within a decade, probably. So you just mentioned Southern Europe, right? Unfortunately, Southern Europe struggled very, very severely coming out of the financial crisis. And I think a lot of policy mistakes were also made. Austerity didn't help because if the economy is already struggling, and then governments need to cut back their spending as well, it just leads to a deeper slump. So basically, Southern Europe was in a severe recession for several years after 2008. And with a lot of job losses, people moving from Southern Europe to Germany actually to find better jobs as well. But then within a decade, Southern Europe actually recovered. That already to some extent happened before the pandemic. And if you look at the situation right now, Southern Europe is actually doing substantially better than Germany, right? If you look at Spain, Spain is growing at a rate of 3% right now. It has a relatively strong service sector. It's being helped by tourism. It's got a massive boost after the pandemic thanks to tourism. But that's not all. I think it's also digital nomads. It's a lot of factors coming together. And Spain is doing well and is creating actually quite a lot of jobs, whereas Germany is very stagnant. So basically, such a recovery, as I said, will not happen overnight. It can take 5 to 10 years, might take a decade. And it also happened in the case of Germany, right? If you think back to the early 2000s, during the Schröder government, Germany was already labeled the sick man of Europe, right? At the end of the 90s, unemployment was, I believe, close to 5 million. And we implemented all these labor market reforms. And then there was also some international factors that helped the German economy. And we recovered within 5 to 10 years, basically. And then unemployment was lowered and lowered. And suddenly we were like the best performing economy in Europe. And now we are back to the sick man of Europe again, right? So we went from the early 2000s to being the sick man of Europe to one of the strongest economies in Europe, and now being back, unfortunately, within kind of like 2 decades. So yeah.
It's an interesting kind of point, Julius, in relation to, I think, almost the predictions and data that some of the kind of government departments are promoting. So case in point, prior to this show, Matthias and I were kind of exchanging kind of information in preparation. Matthias highlighted an article that kind of an IMF report that predicted that from a GDP perspective, Germany would increase to rank third globally from a GDP perspective, which was actually an improvement in its ranking for 2025. And I guess the point that I'm trying to make here is these kind of predictions and forecasts and, kind of positive growth. How long does it take for that to translate down to people actually feeling that? So case in point, again, yesterday, the UK government stated that there was, a quarter growth in relation to the UK economy. Now, the citizens of that country may not be feeling that immediately. So do you have a view and opinion on where
Yeah.
that disconnect is?
Yeah. Let me first explain one thing with respect to these GDP measures and how they work, because you need to be a little bit careful with that, right?
Mm-hmm.
So I looked at that number as well, and Germany kind of in this ranking increased by a couple of ranks above Japan, right?
Mm-hmm.
And why is that? Because there in this ranking, the size of the German economy was measured in US dollars. And so why did Japan fell by several ranks? It's because their currency depreciated a lot over the last couple of years by 20 or 30%. So just in US dollars, their size of their economy is smaller, but that doesn't necessarily mean that the Japanese people are worse off, because in their local currency, the economy is basically still the same, right? So their imports might get a little bit more expensive. It's more painful for a Japanese person to do a trip to the US and go on holiday in the US, but the average person also doesn't do 2 or 3 trips to the US, right? So it doesn't really matter that much. So these currency fluctuations can make a difference. And so that's why economists also look at measures where basically you need to look at the size of the economy, first of all, in your own currency to get a better understanding of where you are. Yeah. So in Germany, that would be euros, basically. But that is not all, because basically the economy can also grow by 10%, but people might not be better off at all. If wages go up by 10%, everybody's wage goes up by 10%, and every single price in the economy goes up by 10% as well, then what economists call in nominal terms, your economy is 10% bigger, but it made absolutely no difference, right? Because all of this is basically inflation. So you look at the economy in your own currency and you do an inflation adjustment. You adjust for the increase in prices to see whether people are better off. And when you do that for Germany, you can see, unfortunately, that over the last 3 or 4 years, in real terms, that's what economists call it. So in inflation adjusted terms, the economy has been more or less stagnant. So in nominal terms, it has gone up, but that is purely because prices have gone up, wages have gone up, and they've basically gone up at the same time. But in inflation adjusted terms, there has been almost zero growth. So people are unfortunately not really better off on average, right? Some people might be better off, some people might be worse off, but on average, people are not significantly better off than they were 3 or 4 years ago. And that is a big difference to Southern Europe, where there has been growth in inflation adjusted terms. So in inflation adjusted terms, the German economy is unfortunately not that much bigger. And that's why there's also so much discontent. Households are unhappy. Everybody is feeling it. There's a lot of uncertainty. People are having a harder time switching jobs. And people are also, I mean, with an election coming up, we might also see the discontent in the election in a few weeks from now, unfortunately.
It's interesting, isn't it, that the point around the source of the data and how to interpret it is a really key message that you're kind of sending through to us, because I kind of feel like sometimes and this is where the echo chamber is formed, we just accept these narratives, we accept this data without any critical thinking, and then we adopt it. But actually, in real terms, there isn't a change, or the change is slightly different. I think what we're trying to highlight here is it's important to understand the kind of, the macroeconomic environment from a people and talent perspective, but equally you have to be critical or have some critical thinking of the source, and maybe have a number of different sources to overlap, and then get a bit more of a perspective on how the economy's actually growing. And it kind of brings us back to Germany, because, as I said, I kind of personal interest in the kind of country, just in terms of having operated in that particular market before. Do you have some thoughts on how Germany might address some of the challenges that it's currently facing in its kind of labor market?
Yeah, that's a good one. I would. I'm not 100% sure. I mean, so let's let me just like briefly discuss what's going on. So
Yeah.
so if you look at the labor market data right now for Germany, historically speaking, we are still having a relatively low unemployment rate, right? But it's been rising a bit over the last 1 or 2 years. What we're seeing right now is that we came out of the pandemic. Germany's labor market created jobs throughout 2021, 2022, but the last year has actually been quite stagnant. And if you look at the composition of jobs, probably most of the jobs, or not probably, most of the jobs have been created kind of like in the public sector, in education, and in healthcare. So education and healthcare is public sector adjacent most of the time, whereas the private sector has actually been shedding some jobs, and manufacturing in particular. So why is manufacturing struggling so much right now in Germany? It's probably for several reasons. At the moment, manufacturing globally is having a little bit of a downturn. Germany is still struggling from this massive energy crisis that we've had as a result of the war in Ukraine. Energy prices in Germany increased by far more than in other countries, and that is leading to cost problems for domestic manufacturing companies who were struggling with these very high energy prices. And also, we are actually at the moment in severe competition with China, right? So China is at the moment exporting a lot of manufactured goods to all over the world. They are trying to get out of their own crisis by basically by exporting to the rest of the world, and not by increasing domestic demand, but just by getting demand from the rest of the world. And 20 years ago, there was the first China shock, which led to manufacturing jobs being lost in the US, but Germany was not that affected because it was more in the space of like household electronics and furniture and so on. But now China is actually exporting goods that are in direct competition with Germany, cars and electric vehicles in particular. So German domestic car companies are in a crisis right now. Their profits are going down. We are not exporting. Our car exports, I think, have halved compared to some 5 or 10 years ago. And there's a lot of jobs that are dependent on the car industry in Germany. 600,000 people directly, and then with all the suppliers and everything else that is attached to it, maybe another 500,000 or even 1,000,000, right? Also think about that these people who are working for these car companies, their salaries are reasonably good. So they're creating, when they lose their job, then there's a lot of spending power that disappears, right? So that is why Germany is struggling. So what can you do about it? That is a tough question, because it's not just a cyclical downturn that would disappear in 1 or 2 years. It's kind of like a structural trend where that is harder to address. But I think the first thing the German government probably should address is that Germany is also a country that has been very reliant on exports over the last 10 years and on foreign demand. And so you cannot, when times are good, that business model might work to depend on the rest of the world, but times are changing. And so basically domestic consumption in Germany is very weak. Investment in Germany has been very, very weak. Public investment. Think about investment in infrastructure. Think about investment in education. Think about investment in domestic energy, the electricity grid, and domestic energy production. We are importing energy right now, especially when there's no wind and the sun is not shining, which does happen. Apparently, we all know it, right? And so that is things where the German government can do a lot of things and boost domestic investment and boost domestic consumption just by spending more money. Is it always good for a government to spend a lot of money? No, especially if you are in a dire fiscal situation. The fiscal situation is I would say definitely worse in the UK. Probably it's the US has challenges as well, but Germany, to be honest, does not have these problems right now. Our debt level is extremely low compared to the rest of the world. And our interest rates are also still lower, quite a bit lower, even though after the pandemic they've risen. But our interest rates are also still quite a bit lower than interest rates for the UK and for the US. So basically, what does that mean? It means that the German government can still borrow reasonably cheaply, and it can spend money to invest domestically and to also to boost domestic consumption. German households are not doing well at all. Their net incomes are at the moment actually going down because public health insurance fees are increasing. So like things the German government could do is to basically, for example, reduce taxes on labor income, help German households to get over the struggle and increase net incomes. And that would boost domestic consumption, and that could already help the economy.
There's a lot in that.
Yeah, 100%.
Sorry.
It's interesting because look, let's say we start investing more. I think this will happen no matter who wins the election and so on. And I don't want to make this a politic or politics kind of podcast. I want to actually just look at the economic options here. So if we invest, let's say infrastructure, as you mentioned, just boosting it. I feel like it needs to happen, but what kind of investments are that? It's investments in an industry sector, right? Which is part of our problem when we look at the economy, right? So that transition that has happened with the UK, for example, there are probably also other countries, is that when we think about, I'm very fortunate, let's call it like this, to always have worked my whole life in tech companies with tech talents. Digital transformation is most of the time part of my game or the businesses that I work for. So I'm very much in the forefront, but literally from a German perspective, we don't have enough tech industry. We don't have enough digital transformation procedures, let alone when we look at our government, our administrative topics, when we look at education and so on, you can go through everything. We lack the talent because we are poor in educating them. We need to get actually international talent in. That then means international talents. Most of them do not speak German, but we are so much in love with our language, which then means, well, if they need to learn German, there's another barrier. Then we already did a good topic with the the law that was enhanced, the immigration law on skill enhancement. I don't know the right word now, but this is something that will make it actually easier for international talent to come in. But again, I think the biggest topic in this kind of, I was listening very closely when you said it takes a decade to change things. And then you are another 2 decades on the rise until, you need to adjust again. Are you saying, Julius, that out of this situation, it takes a decade for Germany to transform in order to then become a powerhouse in Europe again?
No. I mean, listen.
That's a zinger of a question.
Yeah. It's a good one. I mean, one thing to keep in mind when we talk about Germany's problems right now, right?
Yeah.
Germany is still one of the richest economies in Europe. It's the largest economy by far in Europe, the largest. And on a per capita basis, incomes per household or incomes per person are still significantly higher than in Southern Europe or Eastern Europe. So Germany is still a relatively rich country, but the problems we are facing right now is just very little growth in recent years, right? So So, I mean, the problems that need to be addressed right now, when we talk about Germany falling behind, it's not about Germany suddenly being poor or suddenly Germany being last in class or anything like that. It is just making sure that Germany's economy will continue to grow again and that we will continue to create jobs and that we actually make sure that our industry and other German champions that they don't disappear and these companies don't lose out to international competition and go somewhere else and things like that. Um, so I think what you mentioned in terms of kind of like what we need to do, investments and so on, digital transformation, that is one thing where I think Germany has been falling behind, unfortunately, as well, and where actually also the public sector could do a lot and increase spending to help Germany on this path of digital transformation, right? So just think about anything where you have interactions with German governmental agencies. It is I mean I haven't lived in Germany now for several years, but I don't think it has changed. It's either sending letters back and forth or maybe sending a fax or whatever you have.
Can you believe it, Glenn? I mean, this is still a thing. 80% of the companies in Germany still use that thing.
Yeah. And
I'm gobsmacked.
And it's driving me absolutely crazy, just as it's driving me absolutely crazy that I arrive at Frankfurt Airport, the largest German airport. I get into a cab coming from the UK and I ask, can I pay with card? And the answer is no. And like, what do I do then? Yeah, drive me to the next ATM so that I can get out some cash, and I have to pay a fee on getting out cash with my foreign bank card, things like that. You go into restaurants in the middle of Düsseldorf city center, and 1 out of 5 say you can only either pay with cash or German EC-Karte, which foreigners don't even know what that is probably. And I don't have one anymore. Exactly. So that's my point. So I think Germany has a lot of homework to do in terms of digital transformation, and the public sector can definitely help out, but it requires money. It actually requires a significant amount of money to go into every German agency and go on this path of digital transformation, invest into their tech systems, actually hire people who can actually do that job for them. And you just need to take that money into your hand and do it. So again, this goes back to the point of investing. Right.
I mean, from what you're saying, Julius and Matthias, there's a lot of opportunity within the kind of German market for, kind of like you say, digital transformation, technology development. How do you, I mean, I guess, and I know, Matthias, you don't want to make this political, but, government policy helps to unlock investment, it helps to unlock initiatives, and it helps to encourage, kind of overseas investment and companies establishing themselves in Germany. What I guess the key question, and you wrote this down, Matthias, and it's kind of is Germany still somewhere that is Germany encouraging business development and growth? Is the environment encouraging that for startups, for scale ups, for investors? Because it's clear the opportunity is there. So are they encouraging? Are they unlocking this to allow companies and investors to think, Germany is where we want to establish our next kind of European base, if you will?
Look, I think yes. It would be if it would be that easy as we just draw the picture here. Then I think a lot of people would have already done this, or just waiting for it, or would just say, let's get Glenn and his superheroes from the UK over and we'll just nail this and do all of this for the next 15 to 20 years. And then you can retire with 55, or I don't know, 35, I should say. Yeah. So no, I think there is a couple of things here to watch out. So first of all is, and that's why I think we are very dependent on international talent, is the current landscape of creating your own business, setting up your own business, and have a supportive environment. And running your own business in Germany is rather challenging. Challenging means it's really paper heavy. You need to follow a lot of laws. Even if you get lawyers, you might pay more than you actually get investment on, or you have on your own, because there's so much to think about. On the recent podcast, I mean, it's of course an exaggeration, I believe, but I'm not sure. Elon Musk recently said he had I think over 2,000 papers that he needed to print out for Tesla to actually get started in Berlin with all of the laws. And he's like, you must be kidding me. I need to print this out. And there's a person that is stamping every paper. The poor person, this can be solved differently. No, it's like, no. Germans always believe what's in paper, right? Even contracts, for example. If I hire you tomorrow, Glenn, I need to make sure that I have your contract, you have a signed contract of yours in my database, right? I cannot do this from a DocuSign perspective. So there are lots of things like that it's bizarre. Yeah. So I think a lot of things you could do with the regulation to make it easier for people to start a business, get some proper funding. The funding piece is even more important and interesting because most of the time, and please correct me if I'm wrong, Julius, is small, medium-sized businesses are actually the biggest amount of businesses in Germany, right? So it's not so that we are so enterprise heavy. We have a lot of, as we call the Mittelstand, right? Businesses. And what I wanted to say here is that almost forgot it. What I wanted to say is, no, I really forgot about it. Jesus Christ.
Well, you were heading in the right direction there. I mean, I do have a question for Julius while you circle back on that, Matthias, which is, Julius, from your perspective, with all of the sources of kind of economic data that we could access at the moment, do you have some kind of recommended trusted resources that you're like, you know what? Obviously, your own blog post, of course, but you know, when you're seeing a kind of a trend develop or a forecast come out, how do you go about analyzing that? What's your kind of approach? I mean, admittedly, you're a PhD, so you're skilled in it. But for the layman like us who just want to maybe just validate that particular trend report a little bit more, what would you suggest? How would you suggest we approach it?
Yeah, so I would say generally there's two kinds of sources, right? So there's these sources that are kind of like international, coming from international global institutions like the OECD or the International Monetary Fund. They are publishing forecasts for everything, for GDP, for employment, for unemployment, for every single country in the world, and they're writing short pieces of analysis for these countries. The OECD is publishing a lot of policy papers on the labor market, on long run trends, on bureaucracy and the things we've been talking about, what policies countries should implement. But obviously these kind of sources are a little bit more academic, even though some of these papers are policy papers. They are relatively long reports, and not everybody is probably very keen on reading those all the time. But that is one of the big kind of sources I go to. The other kind would be kind of like international, or would be newspapers, journals, sources like the Financial Times and Bloomberg to English sources, or Handelsblatt in German is to some extent the equivalent of the Financial Times, and they have very good pieces on the economy and labor market, and then that's kind of like my go-to sources.
And now I know what I wanted to say.
There we go.
Here we go. I'm getting old. I just realized. So the thing is with the funding part is really tricky, because what we currently see when we look at private equity, VCs, and so on, most of these Series A, B, C startups, they will not get enough funding. So you will say 5 million, maybe 10 million. Maybe the next bucket is 10 to 20 million, but that's pretty much then it. There's a cap. So the amount of money that, and this is again an investment topic here is that German companies, or even, and I think it's a European phenomenon as well, is that we are not investing enough in the innovation companies, in the startups and the scale-ups, because there are another different factors here. Yeah, it's risk capital as well. I think even if you said you use public investment, right? So for example, when you have pension funds in the UK, that does not exist in Germany. Yeah, they do not invest in companies at all. And so from a financial standpoint and from a financial perspective, there are so many instruments that you could use to actually enhance investments in companies in order to drive innovation and change to solve these problems, but they do not exist. And that's why I do believe one part of the solution is not just bring smart people over that help to solve these topics. We need to think about how we run businesses in Germany, how we do operations, administrations, and then also how we financially actually articulate and look at other companies where major investments are happening to learn from that. I think this is something where Germany per se is very poor in. And this starts, even if you want to trickle this down, Glenn, and Julius knows this as well, is that the people are not well educated on financial instruments and how this works. This is an educational lack. The amount of people, like in the UK, I know in London, if I go to a cab driver, he will tell me what he's investing in stocks and so on, and what his strategy is. You will not see this happening in Germany. No, but they would look at you and would be like, huh? Stock market? Me? Never.
So that's really interesting, Julius, and I'd be keen to get your thoughts on this. One of the companies I work with was a kind of buy now, pay later, like a Klarna for the car industry, so for car repairs. And the kind of the partner companies, like the auto manufacturers, super keen to adopt it, could absolutely see the value proposition. The challenge was at the point of the consumer, that taking credit seemed to be socially unacceptable from a general consumer perspective. So the idea of actually taking credit on things like car repairs didn't seem to be palatable at the time to the German consumer. So the manufacturers and the car manufacturers really understood that there was a value add. They could see the value add for them in terms of upsell, etc. But the consumer was just like, yeah, I don't like the sound of that. That doesn't sit within our normal thought process around finance. And I was keen to sort of get your take on that.
Yeah, I have a lot of thoughts on this.
Good.
So first of all, what Matthias mentioned, I do agree that actually getting talent is not necessarily the biggest problem for Germany anymore, right? So Stepstone did this global talent study recently, and Germany is actually quite attractive, and the German government also is doing things to get talented people from abroad, and so that is maybe not even the most problematic factor. It was on the bureaucracy side. We have so much regulation, and then the financial side, right? So Germany doesn't have this financial ecosystem and doesn't have a financial system where these small companies can scale up, whereas that does exist in the UK and even more so obviously in the US. That's why everybody, or not everybody, but so many people go to Silicon Valley or New York or whatever you have, Austin, Texas, to fund to start companies, right? And so what Matthias mentioned is that Germans are actually really not that invested in the stock market. The pension system also does not encourage it. So here in the UK, I have a private sector pension with my company. I pay into it. It is directly invested into the global stock market. I kind of see how it's going up and going down, and in the long run, it should be going up because historically stocks are making a return of 7% each year. Even if you have a very, very bad year, if you stay invested for 10, 20, 30 years, it should increase massively in value. Then there's the housing market, where I'm at the moment considering buying a house because I'm don't want to pay 28,000 euros in rent anymore, or the equivalent of that in London rent. And in order to do that, I need to get a credit from a bank. I'll have a little bit of money for a deposit, but I need to get a mortgage from a bank, and I need to take on debt so that I can actually buy a house. But I will also build up equity over time, and I pay back that debt, and the house price might also slightly go up. And so from that point, that is actually a really good thing. If it didn't exist, I would continue to be a renter, a tenant for the rest of my life, and I wouldn't be able to buy a house. Similarly, I might not be in a position to buy a car, but if I can get a credit, and I really need that car, maybe even to go to work, then I just pay it back over time. So that is a very, very good, or is a useful thing to get credit. But Germans are very risk averse. They don't like credit. And so what does that mean? And most people in Germany also actually have not bought a house or a flat or residential real estate. And I wrote a blog post about this. It's one of the main reasons why a lot of German households have ended up being actually significantly poorer than households in the rest of Europe. So their income is high, but their assets, they're actually what they own, is lower because they continue to pay rent, and house prices have gone through the roof literally everywhere in Europe over the last decade. So if you bought a house in the UK 20 years ago, you know it, Glenn, then you would be very well off just because the housing market is so crazy. You would probably have doubled your money. Even if you haven't paid back your mortgage fully, like your house went from 250,000 to 500,000. But if you continue to rent, you just lose out. And then at the same time, German people are also not invested in the stock market because this private sector pension system, where these pensions, where you pay in and the pensions are investing in the stock market and your pension goes up in value, doesn't exist either. And these pension companies, they do not just invest in the stock market. Big private pensions are also funding infrastructure investment, and potentially they can fund startups, which brings me to Matthias' point. And that is the ecosystem, the financial ecosystem that Germany is lacking. There are no big private sector pensions that are basically investing in the stock market, in domestic infrastructure, and potentially even in kind of like small businesses in Germany that are startups or similar, venture capital, whatever you have. But you have this kind of thing in the Anglo-Saxon sphere. You have it in the US and in the UK. And so it is in the long run, again, one thing that is problematic, I would say, for the German economy, because the households are losing out on these long run returns. It is a burden for our pension system, the way it's structured, that people are paying in, and then the workers are paying in, and the pensioners are, and the money is directly paid out to the pensioners. Whereas, and in the long run, this will be very problematic with the demographic structure we are having in Germany, right? So this lack of private sector pensions is it is something you can change. It is something you can build up, but again, it will also take time.
Yeah, it's fascinating. As I said, it was genuinely quite a surprise for us at the point of the consumer. And to your point around kind of digital transformation, this was kind of an app-based proposition. So there was almost two barriers to the consumer, entry of the consumer market. One, it was purely digital. Secondly, it was it was essentially consumer finance. They saw that before they saw the actual value add of kind of the increase of kind of quality of repairs that you could get by leveraging kind of the kind of consumer finance, as it were. So yeah, it's really fascinating. So closing questions, Matthias, you got a real zinger on your summary. So over to you.
Yeah. I mean, we came already to the conclusion of like what needs to happen, what needs to change, right? This is also why a lot of people believe has nothing to do with talents that are not available, but it's a systematic problem. It's a broken system that needs fixing in order to drive further growth in the right areas. Now, what can Julius Germany learn from other countries, like from Europe? Like, what is it where you would say, well, you know what, when we look at the southern part, or when we look at East Europe, how they have, turned this around, what are things that would be easy or easier to fix without waiting a decade? Yeah.
Yeah. Yeah, without waiting a decade. I mean, I think one thing that could be addressed right now is the current economic slump. The GDP figures that were just released showed that Germany now is in its second year of negative growth, so second year of recession. It's a very shallow recession, but one that is long lasting, 2 years, right? And so one of the reasons households are not spending enough, there's a lack of domestic investment. So the one of the things that the government could do right away and relatively quickly is just boost domestic spending this year after the election. And that could probably the quickest way, to be honest, would be actually some tax cuts for German households, potentially tax cuts for German businesses as well, right? If there is businesses, if they have lower taxes, they might invest more, they might spend more. The economic environment for them would become easier. You reduce the burden because they're facing so many costs on other sides, and taxes are very high in Germany compared to some other European countries. So just reduce the tax burden of businesses and households. That would lead to more spending and investment relatively quickly, and that could at least lead to some short-run growth, right? And then on top of that, you need to fix kind of like all these long-run structural issues we've been talking about. But that requires even more investment. It requires a lot of time. It requires many years to fix the problems we've been talking about with respect to the pension system, digitalization, deregulation, all of that. But that is the long run things that require money, and the short run thing is just boost the economy.
And one last topic, I think this is what Glenn was actually trying to point me to, but I ignored it kindly, is so with Trump coming, how much will we be sabotaged, or maybe will there be a win-win situation? Because everybody talks about the deal maker, and I feel like sometimes people go crazy when Trump says something, and I'm like, look, this is part of his negotiation strategy. Don't you get it? Like, he wants to own the whole world, and then he comes up with a compromise in between, right? So, but what do you foresee here as part of the challenges on this track?
I mean, I think it could be a risk, but also an opportunity for Germany. The risk is that we are at the moment exporting 160 billion euros in goods to the US right now, cars, manufactured goods, anything. If he increases tariffs on that, the German manufacturing sector will suffer even more. So the trade war is definitely a bad thing for Germany, right? But some things, he's like, we don't know what he'll do with respect to Ukraine. It's certain that he will ask us to spend more on defense, etc. And so my sister, she's actually a soldier in the German army. She's on the path of an officer's career in the German Bundeswehr, and we haven't invested in our own military over the last 20 or 30 years, right? I mean, it's really frightening and terrifying, and we were able to do so because we are in NATO. And who has been safeguarding all the trade that Germany is exporting to the rest of the world? Who are securing the shipping routes in the Indian Ocean and in the Atlantic and through the Suez Canal and like in the Mediterranean? It's not that many German military ships being there, but it is the US who's been doing that for us, and Trump doesn't want to do it anymore. So again, if we need to spend more on the German Bundeswehr, that wouldn't necessarily be a bad thing either, especially with the risks we are facing further east, let's say. But that's the topic for a different podcast, probably.
I mean, this has been fascinating in itself. And Julius, we spoke prior to inviting you on as a guest to see if we could tempt you back on for another conversation, maybe focusing on another kind of European country or maybe a global view. So let's put a pin in that. But it definitely would be fascinating to kind of bring you back on and get another conversation, maybe a kind of quarterly review, as it were, sometime in March could be really fascinating. And just for everybody kind of watching, listening, we will be putting Julius's blog posts into the kind of shared content so you can directly access that as well. But Matthias, yeah, I mean, I don't know how you're feeling. I've loved this conversation. Absolutely loved it.
Yeah, I mean, look, it validated a lot of points for me. So that's glad to always have somebody that sees the same things, and at the same time, it's somehow frightening. With a decade, yeah, if you pitch this, if you talk openly about it, right, that you tell people, look, we're in the situation, decade from now, we'll get that fixed. People go nuts, right? Because there are, I mean, as I said, I think with the elections and then the political aspect of that, it will put a lot of things under fire, which we somehow almost in a very attractive way trying to discuss, right? Because then it gets very heated and emotional. But definitely love this as well. Julius, thank you so much. I've been following Julius for some time now. Also, for people who are listening to this, check out Recruitonomics, right? I think it's really, really great. You should also put this link in the in the notes, because that's some really cool stuff. And I think last sentence here, people and talent leaders need to get into stuff like that on regular basis. This is really, really important. If you navigate executives and business leaders in your companies, you need to know that stuff and you need to explain it to them. Because when it comes to opening up a location, an office somewhere in different regions, you need to know this, right? Don't open it up because you want to save cost. What is the political situation? What is the talent you get? What is the stability? How is the outlook going, etc., etc. I think this is the stuff that will enhance your practices to the next level and having very strategic conversations.
Awesome. Great closing sentences to bring that back to talent acquisition. This was super fun. Thank you so much for having me, Glenn and Matthias. Oh, it was
Amazing.
very fun.
Thanks, Julius.
Thank you so
Thanks
much.
all. Until next time.
Bye-bye.